Okay, good afternoon, class. So, we start, or I will continue, I will continue the discussion on the financial statement analysis, which was discussed already last meeting. So, under financial statement analysis, after doing some horizontal and vertical analysis, the next thing is we need to consider the ratio analysis so we can deepen our knowledge with our financial statements or with the financial statements that we are trying to understand for the users of the financial statements to make decisions from it. So when we say ratio analysis, so there are four. Okay. We have four, as I have discussed last time. So the liquidity ratios, the asset utilization ratios, the debt utilization ratios, and of course, the profitability ratio. Again, so when we say liquidity ratios, it pertains to the firm's ability to pay any immediate and incoming cash disbursements. Okay, so we measure its ability to pay its debts. Okay, they're short-term debts. So under this, actually class in other books, mas marami pa yung mga ratios. But for now, I have chose three. No? Ito yung mga most or yung common na ginagamit natin. So the first one is we have the current ratio. So when we say current ratio, it measures short-term debt paying ability. Can we pay, or how much we can pay, or how much we can cover the current liabilities, no? Can we, or can the company pay for its liabilities, for its currently maturing liabilities? Okay, so the formula, as I have given you last time, it's the current assets minus, or sorry, divided by the current liabilities. So I have given you 2013 and 2014 of the EBC Enterprises Incorporated. Now for using the formula in 2014, our current ratio is 2.4 times, while in 2013 is 2.75 times. So as you can see, no, from 2013, bumaba po siya in 2014 at 2.4. So, medyo maliit lang naman yung dinicrease niya, but still, it's decreasing, no? It's a 0.35 difference. So, what does it mean? So, it means that EBC's current ratio indicates that at year-end 2014, current assets covered current liabilities 2.4 times, meaning you can pay 2.4 times in every peso of your liability based from your assets. Its significance could be evaluated by comparing this with industry competitors or the company's trends of liquidity over a longer period. Okay. It seems that the company is doing well as we are currently looking dun sa kanyang current ratio. Kaya lang, there are instances, class, no? Kasi when we say current ratio, when we say current assets, it includes cash, marketable securities, or short-term investments. We also have receivables, we also have inventories, and also prepayments. That's the reason why the two other ratios was calculated for us to be convinced that the asset is really liquid. Kasi when we say current, merong inventories doon, merong receivables. What if those receivables are already aged? What if the customers pay slowly? Meaning, ang laki pala ng portion of our current assets is our receivables, which we are not yet, or for a long period of time, is hindi na natin siya nakokollect. So how can we make sure, or how can we rely on this, diba? That's the reason why we compute for another ratio. For us na yung ratio na to, or the current ratio, ma-defend natin that the company is liquid, no? So in support, okay, that's the reason why. What if yung inventories natin is not yet sold? We're unable to sold it for a reason na wala na sa trend. So those are the possible reasons, and it's included in the assets. That's the reason why we have the next ratio is our liquid ratios, no? Or in other terms, yun yung tinatawag nating quick ratio. So it is more rigorous test or a true test of the company's ability to meet its short-term debts. So the formula for this one is the liquid assets over the current liabilities. So we are choosing now the more liquid assets other than assets within the list, di ba? So ano yung inaalis natin dito? So what we are trying to include dun sa liquid ratio is we get the cash, marketable securities, and of course the accounts receivable. Take note, class, you have to get the net receivable, so you have to deduct any allowance for bad debts or any allowance for doubtful accounts. So in 2014, as you can see, it's 0.67, and in 2013, it's 0.92. So it's just the same with the current ratio, which decreased a year after. So EBC's quick ratio indicates the deterioration between 2014 and 2013. So an analyst might be quite concerned about several disquieting trends revealed in rising of short-term debts, increasing inventories. This ratio must also be examined in relation to other firms in the same industry. Kasi possible naman, it really depends, no? Kasi when we are trying to analyze our financial statements, so it really depends if anong klaseng industry ba tayo, no? Anong klaseng inventory ba, no? Meron din tayo. Anong klaseng marketable security or what type of company are we? But as you can see, bumaba din, no, yung ating yung ability natin to pay. Yung ability natin to pay. So liquidity ratios normally ginagamit yan ng ating mga suppliers and creditors kasi they are trying to know, especially the short-term suppliers, di ba, minsan binibigyan tayo ng 180 days, 90 days, 6 months. Depende dun sa supplier na makukuha natin. If they are given, kung magbibigay sila or they will extend credit for our company, then they really have to know if we could pay them. So medyo bumaba yung performance niya in terms of liquidity. Okay? So the next ratio is the cash ratio. So when we say cash, so we consider cash, no, in addition to the truly liquid assets. Kasi wala namang ibang liquid assets kasi nga possible, no, dun sa ating liquid assets because the receivables are included there. Paano nga kung aged na yon? Unless i-dissect natin yon one by one, we could remove, no? We could remove those very, very aged na. Kumbaga, yung, kasi sa aging natin ng receivables, we do that, di ba? Kaya naman natin yung mga years na hindi nakakabayad. But using this cash ratio, ito yung in addition, no, in our decision. So let's try to check. So the formula, of course, it's the cash and over the current liability. So ito actual cash na. How much cash can we pay? Or our ability, no? Anong percentage ng mababayaran natin? How many times of it? So in 2014, we computed 14 times, 0.14 times, no? We could pay it. And of course, in 2013, it's 0.11 times. So as you can see, kung napansin nyo yung kanina, the current ratio as well as the quick ratio or the liquid asset ratio, parehong bumaba. Pero in terms of cash, okay, nag-increase naman siya. So maybe there are some factors, no? Kaya ganun ang nangyari. So EBC Enterprises Incorporated, current and quick ratio both decreased between 2013 and 2014, which can be interpreted as a deterioration of liquidity. But the cash ratio increase indicating an improvement in liquidity. So merong medyo contrast, no? That's why can we conclude now that the EBC Incorporated is liquid or not? Or is it really deteriorating its liquidity from 2014 to 2013? Then for classroom purposes kasi, we just pose that question. Pero in reality, we really have to get industry. Anong klaseng industry ba yung itong kinukumputa natin? Because of the very limited information na meron sa atin. So all we need to consider is yung trend ba nung ating ginagawa or yung ating company is so kaya nga meron tayong tinatawag na industry. Ano bang best or ano bang ratio ang kailangan natin i-meet when it comes to this industry? Kasi magkakaiba 'yon. Depende 'yon, no? Depende sa company. So ngayon, if we're going to decide now, are we still liquid? Well, actually, class, if you can see naman, liquid pa rin naman tayo. It's just that bumaba. Kumbaga, kung on a percentage of liquidity natin, kumbaga bumaba lang siya. But still, I can say that we're not liquid. Bumaba nga lang. Yung performance nga lang natin, bumaba yung liquidity with two ratios. Pero when we are using the actual cash, actually we're not. Hindi naman. So, maybe, if you were to ask me kasi, yung dun sa marketable securities, there's a big change for that, di ba? So, ibig sabihin, maybe some of our investments was already sold after a year. Kaya, ganun yung naging effect sa atin. And who knows, di ba? Yung palang marketable securities or yung mga short-term investments natin, what we did is, maybe we invest it with what? With inventories. Kasi pansinin nyo din yung inventories. Tumaas siya, di ba? Kaya lang, maybe we can check it later kung ganun ba nag-increase yung sales natin. So, as we go along, so siguro ma-answer natin yan, ano? Okay, so those are liquidity ratios. What is important with liquidity is you really know if we will know kung can we or the company can pay its liability. Okay, so yun. But basically, as we can see with EBC, yes, my answer is yes. They can pay its current obligations, no? Currently maturing obligations. Okay, so the next one is the asset utilization ratio. So when we say asset utilization ratio, it measures how often is turnover of accounts receivable or inventory and long-term assets. So, yun yung, di ba last time I have discussed na meron tayong 5, no? Meron akong pinapakompute sa inyo. Actually, I have given you this in advance for you to compute the ratios. Then we will just discuss what does it mean, di ba? So, we have 5. So, under asset management ratio, we have the total asset turnover, the fixed assets turnover, the inventory turnover, receivable turnover, and also the working capital turnover. So this ratio shows how efficient the company is in managing its assets to generate and maximize sales revenue. Okay, let's move on the first one. The first is the total asset or the total asset turnover. So it measures the efficiency of the management to generate sales and thus earn more profit for the firm. Remember when you discussed the review of basic accounting, we have defined what is an asset. So when we say assets, these are the resources that may result to an what? To an inflow. Diba? So meaning mayroong babalik sa atin. That's the reason why we invested. Okay, for us what? To gain profit. So yun yan. Now we're trying to test or we're trying to measure. Are we efficient enough with those kinds of investment for us or for the firm to have or to earn more profit? Okay, so the formula will be sales revenue over the average total assets. So, with this formula class, pag nakikita nyo yung average, depende yan, no? If there's a chance na mag-average kayo, you always use the average. Kasi sa ibang books, it's a sales revenue over total assets lang. Well, for a single period, kung isang period lang yung ibinigay sa inyo sa problem, then you can make use of that. But if you're going to ask me, it's good to use the average kasi mas makukuha mo yung trend niya if you're using the average. Kaya lang, syempre, depende yon when you are having an exam, depende what kind or ano ba yung gagawin natin. But if you were to ask me, you really have to make it or to do it on the average, no? Okay, so when we say asset turnover, so yan yung formula natin. So as computed, in 2014, it's 2.52 times, and in 2013, it's 2.02 times. So meaning, 2.52 times nakapag-generate ng income because of the assets that we are or that we invested in the firm. So higher ratio is preferred as it reflects more efficient asset utilization. So the more, the merrier, the higher, the better. So parang ganun. A low asset turnover ratio reflects the bad management of assets by the company. So dito naman sa EBC, okay naman siya kasi it increases actually the asset utilization in generating profit. Okay, for EBC Incorporated, that the total asset turnover has improved primarily because of the improvement in fixed assets, inventory, and accounts receivable. So as we go along, we will check if that's really what happened. Okay, the next is fixed assets turnover. So yung kanina, parang dun sa liquidity kanina, di ba? We start with let's start with the total. Pero ngayon, isa-isahin natin, which kind of assets kaya dito? Yung talagang efficient or effective when it comes to, or efficient in generating sales or in generating profit. So, fixed assets turnover, the formula will be sales revenue, and of course, yung involved na account, based from the title of or based from the ratios name. So, yun. Siyempre, ang fixed assets or the average PPE. Then, in 2014, it's 8.97 times and 8.16 times. So meaning there is an increase, no? There is a 0.91 increase in the turnover sa ating fixed or on our fixed assets turnover. So let's try to look mamaya. Then let's try to compare with other assets such as inventory and receivables. So for EBC Incorporated, the fixed assets turnover improved slightly because of the 41% increase in sales as compared with 26% increase in average assets. This occurrence, however, should be further examined with the framework of the overall analysis of the company as with that of the industry. So, well, actually, yes, no. Hindi ko na pre-present class, but I have asked you naman to prepare the horizontal and vertical analysis. So, pag gumawa kayo, you can see there na nag-increase yung sales natin, di ba? As to compare. Pero yun nga, slightly improve lang siya. Then let's try to check with other turnover later, the inventory and receivables. So when we say fixed assets, so ibig sabihin, how many times in every it expresses the revenue, no? Yung revenue natin per peso accounts, how many times does it earn money? Okay, so kung increasing siya, the better. Next is the working capital turnover. Yung working capital class is equals to current assets minus current liabilities. So that's the net. So when we say, I remember when we were reviewing when we are having a class with the review of basic accounting, when we say working capital, that's your investment part. Yun talaga yung what you own. Ngayon, dun sa invested mo, no, aside or deducting any debts or any liabilities, how many times can you generate? How many times can you generate an income? Okay, so the formula will be the sales revenue, because we're trying to get the turnover. When we're trying to get kung gaano, alin dito sa mga assets na to yung nag-generate. So let's try to do this, the working capital. Okay, in 2014, it's 0.67 times, and in 2013, it's 0.92 times. So as you can see, mas mababa based on debt. So, kasi mamaya as we go along with the debt utilization, mako-consider natin yun. Dito after deducting. So ibig sabihin, in generating our sales, no, we need the help of the liabilities or yung mga creditors natin for us to generate this kind of sale. Kasi kung titingnan, bumaba siya talaga, class. Okay? Okay, so parang mali yung naka-indicate dito. But for EBC, no, bumaba or the working capital turnover decreases. So meaning, there is a part that the creditor or yung ating creditors help for the generation or in generating sales. Okay? Wala namang problema yung class if we will be having a credit or if we will be having a payable or if we were going to have a debt. As long as you can generate sales from it, as long as you can generate profit from it, and that profit can cover the interest expenses for that specific debt. Otherwise, pag hindi, kahit na yung interest expense na lang niya ay hindi niya mabayaran, that's another idea. No? Okay, next we have inventory turnover. So when we say inventory turnover, it measures the efficiency of the firm in managing and selling inventory. Okay, of course, the formula will be the sales revenue and average inventory. Class, by the way, no, in 2013, I am using not an average. Instead, I am using yung existing figure niya on that account kasi wala na akong i-average kasi we don't have 2012 account. Pero kung available yun, then we can make it an average. Okay? So in 2014, it's 5.14 times and 4.16 times in 2013. So how much, how many? 5.14 minus 4.16. So that's 0.98%. Well, it's just the same as with the fixed assets kanina. Yung fixed assets, it's 0.91. So what does it indicate? No? EBC Incorporated was 5.14 times in 2014, which is an improvement over 2013's 4.16. Generally, a high turnover is preferred because it is a sign of efficient inventory management and profit for the firm. Plus, actually, when it comes to inventory turnover, mas maganda siya na mas mataas yung turnover natin dito. Kasi when we say inventory turnover, so we're really generating sales. Kasi yung inventory na yun is yun yung ginagamit natin eh. Yun yung ginagamit natin for our revenue. Kasi without inventories, we cannot have a sale. Tama ba? So it determines the number of times of the inventory is purchased and sold during the entire fiscal year. Okay? So yan yung ibig sabihin niyan, ano? Generally, if the product for sale is faster, inventory turnover ratio would be better. A high ratio will indicate good sales or buy in small amounts. Okay? Next is when we are computing the inventory turnover, we also try to compute the average or the day sales or the average sales period. Ilang araw natin na ibibenta yung inventory natin. Number of days being taken to sell the entire inventory. For an instance, ito, bumili tayo for 100,000. How many days are we going to sell it? So 365 days. Some are using 360 days, so it depends. Divided by our inventory turnover. So in 2014, we sell it at 71 days, while in 2013, we sell it at 87 days. Meaning, we have shortened, no? Umikse yung period of selling. O baka naman yung mga sales agent natin, they did their best. Ginawa nila yung best nila. More than what they did last year for us to generate this or for us to have this. So maybe that's the reason why we have a higher turnover. Diba? Why we have a higher inventory turnover. So meaning, mas maganda yung performance nila ngayon. Mas maikse. So ibig sabihin kasi class in 365 days and you can sell at 71 days. So mas dadami yung point na bibili ka ulit, then you sell it again. Okay? You will buy again, then you sell it again. Kasi ano naman ang gagawin natin dun sa remaining period? Alangan namang titingnan lang natin, of course not. So, the shortest period, the better. Kasi it means you can sell it as early or as soon as possible. And as long as you can sell it as soon as possible, you have an opportunity to buy again and sell it again, buy again and sell it again. So that's efficient managing, or that's efficiency. It shows only the efficiency in managing the inventory. Okay. Next is the average or the receivable turnover. It measures how many times a company's account receivable have been turned into cash during the year. Siyempre, class, hindi natin may iwasan yan that we could sell on account, diba? Now, the question is, yun bang binibenta natin is what would you call this? Can we collect it? No? So, tingnan natin yun. The formula for the sales revenue is over the average receivable. Now, in 2014, it's 24.9 times, and in 2013, it's 18.32 times. So, meaning that EBC converted receivable into cash 24.9 times in 2014. So, mas magaling yung collector nila this time, no? Okay, so the turnover receivable has improved, and this may indicate better quality of receivable and improvement of firm's collection and credit policy. So we're just trying to check if those sales ba is nako-collect natin. And yes, it's a good indicator. Actually, yung kasunod, like we have in our inventory kung the average sales period. This one naman, we try to compute what is the average collection period. It helps evaluate the liquidity of accounts receivable and the firm. So let's check. In 2014, we collect, the average collection period is 15 days, which is 5 days shorter than 20 days, no, in 2013. So the ratios indicate that during 2014, the firm collected its accounts 15 days on the average, which is an improvement, no, from 2013. But class, meron lang akong gustong i-indicate dito, no, or i-pinpoint. Let's say that it's good, no, that there was already improvement. Kaya lang, when it comes to, kasi we're trying also to check, no, kung tama ba yung policies natin in handling receivables. Well, class, if our terms for collection is 20 days or 30 days, then it's really an improvement. The problem there is, what if our credit terms is only 10 days? Okay, this is not yet good enough. Kumbaga, parang kanta ni Sarah yan, no? Not yet. Ano ba yun? Nakalimutan ko na. It's not yet good enough for our company, no? Pero syempre, given so parang ang ganda ng impressions. Sabi ko nga sa inyo, actually these are the things you really have to consider. Kaya lang kasi limited kasi class, no? Yung ating mga data, limited yung information about our firms. So that's why the very reason is ituro lang sa inyo how are you going to interpret and use these ratios, no? Okay? So I think we're done with the asset utilization ratio. So again, when we say asset utilization ratio, the question here is, did the company utilize the asset well? Based on this ratio, based on this performance, well, I can say yes. No, probably wala naman akong doubt. No, it's yes, they could. Okay. So next are the debt. No, the debt utilization ratio. So when we say debt utilization ratio, we're trying to check, no, the solvency here, no. Okay. Or ano ba yung ginagawa ng debt, no, for how does our debt perform with our company? Okay, it means that we have the sufficient resources to meet all application and vice versa. Also, under debt utilization ratio, we're trying to compute, no, how many % ba ang contributions ng debt or ng debtors versus or the creditors versus the investors. So yun yung isang tinitingnan natin actually din dito under the debt utilization ratio. So we actually guys mas marami pa, but I have given you 3 ratios lang. So the first ratio is the debt ratio. So when we say the debt ratio, it measures the proportion of all assets that are financed with debt. Okay, total liabilities over the total assets. We're trying to compute here dun sa total resources natin, how much, ilang % doon, how many % does the creditors own and the investors? So, well, class, if you were to ask me, no, ang ideal debt ratio sana is 50-50 or lower than that. Kasi ibig sabihin, yung 1 million na assets natin, ang kalahati pala nun sa creditors, kalahati lang yung meron tayo. So, if we could lower it to 50 yung ating debt ratio, then it's better. Okay, in 2014, it's 51.8. And in 2013, it's 50.1%. Oh, ibig sabihin, the creditors owed much than the investors. At nag-increase yun, no, in 2014. Okay. Nag-increase siya ng 2014. So, what does it mean? No? What does it mean in our ano? Okay. Actually, class, kung titingnan nyo, yung inyong horizontal analysis, nag-increase naman talaga yung debt natin eh. The short term and also the long term debt was increased, no, from 2013 to 2014. So it follows, no, na mas tataas talaga siya. Now, well, I cannot say that this is a good or bad indication kasi yun nga, sabi ko sa inyo, as long as we could lower it. Pero I am not saying na masama naman ng or I am not saying that it's not good for the company to have debts or credit. Malay mo naman this would make, or those debt would make the company improve later. So maybe we could see. So we cannot really judge. So kaya nga minsan in computing some ratios, we really need to get the trend. Okay? Or maybe on a positive side, ano kaya ang gagawin, no, ng management na nakita nila ng ganyan ang performance ng company? Maybe they could decide or maybe they could plan kung paano nila yan pabababain. Okay? So, hindi pa naman ganun kagrabe, mahirap parang yung Enron. Paano kung 80% was owned already by the creditors? So, siguro as to compare this one, hindi pa naman. Kung malapit nito, dito class, we will try to use, no? Is it really material, no? When we are trying to decide yung 1.8%. Is it really material na sasabihin natin, let's stop having an obligation or let's stop having a debt, di ba? So, depende yun. Depende yun sa actual situations. So, EBC's debt ratios in 2014 and 2013 indicate relatively heavy reliance on borrowed capital. Oo, yan yung sinabi ko kanina, no? And they have reached the generally considered maximum ratio of 50-50 capital. So, I cannot really say, no, that it's a good or bad indication. But for now, let's pause, no? As long as, sabi ko nga sa inyo, as long as the other ratios improve, such as the profitability, and as long as it cover the interest expense, then we're all good. At kung kumikita pa yon, kasi if kumita yon, we have the chance to pay our debt. Ang mahirap kung di na siya kumita, then we will not have any chance to pay it. Lalo tayo lulubog. Yun yung sinasabi, lulubog na tayo sa utang. Okay? Next, after the debt ratio is the debt to equity ratio. It measures the riskiness of the firm's capital structure in terms of relationship between the funds supplied by the creditors and investors. So the formula is the total liabilities over the total stockholders. Siyempre kanina, no? Kasi more than 50% na yung ating ano. So natural lang, no, na mas makikita natin na mas malaki na yung percentage talaga ng liabilities over our stockholders' equity, which is 107.46% or 7.46 higher in 2014 and 0.46 higher in 2013. So meaning it only shows na talagang we have several debts in 2014 compared with 2013. Okay, debt equity ratio increased between 2014 and 2013, implying a slightly riskier capital structure. Slightly pa lang naman, no? So, maybe if we could continue this, no, kung meron pa tayong 2015, kung ano na kayang nangyari, did they already pay their debts? So, but based on this one, if you are the financial manager, so maybe you could give some ideas, Mr. President or Mr. Vice President or whoever is your superior, maybe you could report that you could justify na siguro we could pay more on our debts kasi kumita naman tayo pero wala pa tayo sa profitability. Maybe later no, pag nakita na natin yung full statement. Okay. Another under the debt utilization is yung times interest earned. Ito yung kanina ko pa sinasabi. Yes, we have incurred debts. No? May mga utang tayo. The question is it bad or good? Well, sabi ko nga kanina, as long as we could pay the interest due for our debt, kumbaga yung income natin can cover the interest expense, okay lang yun. Basta sobra, wag lang kukulangin. That's the big problem. Kasi pagka ganun, wala na tayong chance, no, na makabawi. But still, if we have an excess for after payment of such interest, we still have an excess, then those excess or yung excess na yun, pwede natin pambayad yun, no, before we invest with or before we venture with another thing. Okay? Times interest earned, it measures the ability of the firm's operation to provide protection to long-term creditors. Kasi ito yung tinitingnan if you could pay yung interest mo doon sa existing loans mo. Okay, B. Formula for times interest is the, diba binigay ko sa inyo to that last time, it's the earnings before interest and taxes or operating profit, no? We have gross margin, less cost of goods sold, less expenses, diba? Those are operating margin. Okay, so in 2014, it's 7.44 times, and in 2018, it's, in 2013, it's 5.18 times. So what does this indicate? The increase, EBT increased its use of debt in 2014. The company improved its ability to cover interest payment from operating profit. So as you can see, no, kung titingnan natin yung income statement, from 2013, the interest expense is 1,138, which was increased in 2014. Pero class, kahit ganun yung nangyari kasi nga we incur debts, syempre, natural lang yun, tataas yung interest natin. But still, no, the performance of the company, the operating profits have a higher interest earned ratio, meaning has a higher times na pwede niyang bayaran yung interest niya as to compared last year. So kahit nangutang tayo, okay lang. Kasi we can pay it. Okay? We can pay it using our profits or from profits. So, ibig sabihin kung the chances are nangutang tayo for a reason na nag-expand tayo ng place, then we could make use of or we could buy more inventory para maibenta natin for a certain location, and because of kulang tayo ng capital, that's what we did. We have nag-loan tayo, no? Ngayon, we make use of that for us to maximize the profit. So talagang nangutang tayo. So may lumagpas tayo, no, dun sa 50-50 ideally na ownership sana ng firm. Pero as you can see, okay lang naman kasi maganda naman yung naging performance niya eh. Nagkaroon naman siya ng magandang return. Dito pa lang yan, we're trying to check, no, dito sa debt utilization. Maganda din yung performance as to assets kasi they really those assets really produce income, produce sales, no? Okay, lalo siguro, no, for the next ratios, which is the profitability ratios. So profitability ratios. When we say profitability ratio, what do we measure? Of course, how much profit do we earn? It measures the capability or the capacity to earn sufficient return on sales, total assets, and equity. Okay, we have 5 ratios. Let's start. Gross profit margin. No? When we say gross profit margin, it's the ability of the company to control costs and inventories through sales to customers. Kasi dito class, we're trying to check how many percent ng gross profit, how many percent of the gross profit based on sale. So ibig sabihin, we're trying to compute, no, ilang percent. In 2014, it's 40, and in 2013, it's 39.9. Hindi masyadong naglayo, no, yung percentage natin. Kasi ito class yung kapag nagpapatong tayo, ilang percent ba ang pinapatong natin. So something like that, no? Gross profit margin for both 2013 and 2014 and 13 have been stable, which is considered a positive sign even if the company had to offer probably discounted items to attract customers to hasten up inventory turnover. So ibig sabihin, yung margin mo, kung halimbawa meron kang 100 pesos worth of inventory, then you will resell it at 140 because your aim is to have a gain of at least 40% or a revenue of 40% before deducting any expenses. So, somehow, for you to perform well, di ba? Talaga namang merong ganun. May mga sales, may mga discounted price, but still, you perform well. Okay? Next is the operating profit margin. Of course, under operating profit margin, you consider all the expenses with the normal activities, except interest and taxes, no? So you measures the overall efficiency and incorporates all expenses associated with normal business activities. So the formula will be operating profit. So you have sales, less cost of goods sold, less operating expenses such as your overhead, your utilities, your salaries, your rent, if there is. So that's it. In 2014, it's 8.9%, and in 2013, it's 7.7%. And as you can see, no, the 41% increase in sales, no, hindi na masama kasi you increase your margin. So operating margin increase after considering all expenses in the normal course of business. This ratio can be compared with previous year's performance to determine profitability. Now, can we say this? Are we having profit or profitable ba yung company? Yes, plus kapag pataas ang profitability ratio, it's good. Pero pag medyo may decline sa figures, yun yung nakakatakot. Kasi may utang ka na, hindi ka na, you already have your debts and hindi ka pa rin kumikita. Pero ito okay lang na may debt ka, may mga debts ka. Ang importante, you're earning. So, ibig sabihin you can pay. Okay, the next is the net profit margin. So pag net profit margin, you already consider the interest and your... Pare-pareho lang naman sila. Why are we going to compute those three? Actually, class kasi, we were just trying to compute later. Saan ba yung may big effect? Doon ba sa operating expense? Doon ba sa cost of goods sold? Kasi with that, makakapag-decide tayo kung alin ba, mag-cost cutting na ba tayo with our operating expenses or doon sa cost of goods sold natin, yun na ba talaga yun, or maybe we could find another supplier and etc. Those are the decisions. Kaya ni isa-isa lang natin siya. But provided that our ratios are increasing, well, still it's good, no? It's a good performance. Okay, take note, performance. I'm using the performance, kaya nga statement of financial performance yun because we're trying to determine if the company performs well. Okay, so in 2014, it's 4.36%, and in 2013, it's 3.87%. E-business net profit margin slightly increased despite increased interest and tax expenses. Totoo yan kasi nga nagka-loan tayo, di ba? Okay, tumaas yung interest natin and yet it's still increasing. So, ibig sabihin, maganda talaga ang naging performance. Yun yung sinasabi ko sa inyo that even if you have debts, provided you can pay for the interest and you have or you're earning or you're having a margin, no, na pataas, medyo ka na, kumbaga, kaya mo nang i-defend yan ngayon sa president nyo or sa CEO nyo. Sasabihin niya, bakit ganito nangyari? Well, we have more debts rather than our capital. Sir, it's because nung nag-open tayo ng another branch for this site, nagkaroon tayo ng debt for that. But it's good. They perform well. Diba? Pwede mong pangbangga yun. You can use it as a defense mo yun later. Okay? Kasi ikaw din nag-suggest nun eh. Diba? Sinuggest mo kasi nag-open kayo ng branch, sinuggest mo rin na mag-loan ka. Okay? In reality yun, class. Sinuggest mo sa CEO nyo na you can borrow loan with a lower interest, provided na yung interest, let's say ganito, ang interest natin na babayaran is 8% per annum. Boss, we could pay for that. Actually, we could earn 20%. Okay? 20% higher than the interest that we are going to pay. Ilala ko yung mata ng boss mo, talaga ba? Okay, di ba? And this is the result now. Eh, ang sabi ng boss mo, ayoko ng ganyan. Ilang percent ba yan? 4.36% minus 3.87. I don't want a 0.49 increase. I want a 5%. Sabi ng gano'n sa'yo, no? So then you will strive harder. Then you will be another strategist ngayon kung paano mo gagawin yun, no? Actually, sir, this is our first year of operation, kaya okay lang po na ganyan. We invested building, we invested ganito, kaya po medyo mas mabagal pa yung return niya. Pero Pero, Mr. President, don't you worry kasi next year, ganito, ganyan. These are the trends. Uunahan natin sila, etc. So, those are the things that you have to consider. Okay? Next. Okay, the last two ratios under profitability. Actually, we will compute the financial leverage later, no? I will discuss it a little later. So when we see return on investment on assets, ito yung tinatawag kong ROA and the return on equity. It measures the efficiency of the firms in managing its total investments in the assets. Actually, kanina class, we already have the positive utilization, asset utilization ratio. So, ibig sabihin, we are really managing our assets in providing very well, or we are efficient in managing assets for us to have revenue or maximize profit. Ngayon ito, mas mapapatunayan mo pa that it's true, no? Kasi our formula for this one is the net income over the average total assets. So, ilang percent ba ang kinita ng company using those assets, no? If the firm has an interest-bearing debt, the ROA is computed using the following formula. So, pag walang interest-bearing, yun yung formula natin. But for this one, it's the net income plus you have to add the interest expense after deducting the taxes, no? Divided by the total assets. So, the answer in 2014, it's 12.63%. And in 2013, it's 9.5%. So, that's the return on investment. So, as long as it is not negative, maganda yan. Diba? At mas maganda yan if it is increasingly, nag-i-increase or it is increasing every year after. After every year, nag-i-increase yan. Okay? As long as it is not zero. Kahit nga 1, maganda na yun eh. Lalo kung halimbawa kasi sir, 2 months pa lang tayo nag-ooperate eh. So it really depends on the situation. It really depends on the firm or the industry. Okay, later gagamitin natin yan for the computation of financial leverage. Next is the return on equity. It measures the efficiency of the firm in managing its total investments in assets. So net income, average total assets, over the average total assets. Sorry, it's not total assets. It's an average, the stockholders' equity po yan. Okay? So it's 22.42% and 15.6%. Okay? So ibig sabihin, how did you generate, by its total investments or by your total stockholders yan. Okay, now financial leverage index. These ratios will also measure how effectively the company is using financial leverage. What do we mean by financial leverage? When we say financial leverage, it's the debt, no? Okay? So, ROE over ROA. It's 1.78 and 1.64. EPC's financial leverage index of 1.78 in 2014 and 1.64 in 2013 indicates a successful use of financial leverage. When we say financial leverage, it's debt. Nangutang tayo, di ba? Ngayon, are we successful? Okay ba lang ba na nangutang tayo? Yes, the answer is yes. No? Although, yun nga, the borrowing increase. The firm has generated sufficient operating returns to more than cover the interest payments on borrowed funds. So maybe next year, we can improve more. Sasabihin mo lang naman sa president mo yun, di ba? After paying all the debts, then all the returns will be ours. Provided, you can manage or you can utilize the asset, provided that you could have that kind of sale, provided that you could have a higher inventory turnover, provided that you can collect more. Kumbaga, provided all things are equal, or kaya mo pa rin gawin lahat yon, tapos wala ka ng debts, then that's a very good situation. Okay? So, that's the end. For any questions, you can message me. You can use the group chat. You can use my email and contact number. Okay, that's all for our lesson for tonight. So again, thank you very much and have a good night.